What's going on, everybody? Peter Zay coming at you via Markify and Benzinga. Wanted to give you the market outlook via options this week. Thank God September is over. All right. Excuse me. Thank God August is over. September usually, things pick up a little bit more. School's back in, traders are back in. Everybody's having their last hoorah during Labor Day. Markets have been telling us that nobody has been around exceptionally because, again, we are just in major chop. Even though we're fading lower and lower, this has been the worst market for shorts overall. I would watch SPY to get over 165, the possible test of 167 again. Play some at the money options again because things are relatively cheap, and I would slowly swing positions. If you want to look at the entire board, it's been a complete mess. Amazon, Google, everything's a little bit lower, but not really lower. Everybody's looking for that Tesla short, actually, and kaboom, it goes at the end of the day. I would really be careful. Watch this thing over 169 again, bounce off the 169 on on Tuesday, Wednesday, and see how well she does. Again, she might go for new highs one more time before actually getting in the real short. Again, this is a cult stock. Be very careful of trying to short that on light volume. Okay. Everything else is holding up relatively okay. If you look at it across the board on the techs, Amazon's holding, Google's holding, Priceline is holding. They are holding lower levels, but this is relatively okay for a pullback. I don't expect this to be really that much of a inherently that much of a bearish market. Overall, Goldman Sachs, Citigroup, these guys have already retraced a ton already. Especially Goldman Sachs off of 170 back down to 150, lower 150s. Citigroup doing the same thing. JP Morgan, Bank of America, they all look the exact same. Everybody's looking for the bounce. One thing you want to be careful of, though, again, is the exogenous events. So the exogenous events can essentially just tear up your markets. Okay. Perfect example, when Kerry came out and talked about sarin gas and all that nonsense on Friday, you got up and down, anywhere between like 80 cents to $1 on the SPYs, and the entire board gets really messed up. Until the actual real news comes out on Syria, I would be very careful holding any positions. I would be in scout mode. Overall, if you want to look at things from a volatility standpoint, we have been going up on the VIX. Hopefully somebody was able to catch the dip buy down in the 14s. We're back in the 17s already on VXX. And overall, I don't say this in terms of, this is a sign for the bear markets. All this is saying is that people are demanding volatility again. Okay, so that means that overall all your options are going to have a little bit more premium. Remember, VIX represents the at-the-money volatility at those times. And again, the Syria news is essentially what's causing the spike up in the VIX. And the SPY literally is unable to tell which side of the story they really want to go into. And essentially, we've got a confused tape again. Either this is going to lead to a real short look to the markets, or it's going to be another horrendous couple of weeks of chop. I'll be very careful. Again, the risk reward right now is to either look for a bounce or short some rips. But again, the tape is unclear across the board. People are just coming back from vacation. It's the Labor Day hoorah right now, and then there is a possible imminent war in front of us. Okay, so again, I'd be very careful playing in front of all this economic news and kind of uncertainty, and kind of sit on the sidelines. If you want to play, again, you might have some decent juice on some of these if you're going in scout mode, playing on Mondays and Tuesdays, playing about 2 or 3 strikes out of money. This will save you some money from being out of the markets, and also at the same time, volatility will give you a little bit of boost in your overall bid underneath your options. So again, guys, still consolidation. Exogenous news events have been pushing markets up and down and have not really had time to give the markets a chance to settle in what they really want to do. Again, I don't expect the SPY to make it over 170 anytime soon without any real catalyst. I think that the top is overall in, and that the shorts can be very, very tough, and then you have to catch this thing on a rip. All right, everybody who keeps shorting the bottom, it's not really working out. People were looking for the short on Tesla, and it just ripped in their faces. This is just a sign of the times. Shorts just don't work the way they used to right now. It's not that type of market environment. Again, either sit on the sidelines, short the rips, buy some dips, buy two to three strikes out of the money depending on your price levels, and do that on Mondays and Tuesdays. I would be very careful from Wednesdays all the way into Fridays, just because overall, you don't have any real market direction, and this is a market makers galore here. So they're literally just going to pick off everybody that's trying to trade something that's they think is going to move, but we're really in just chop. So again, guys, be careful out there. This is Peter saying via Market Find Benzinga over.